Suppose you need a small loan, which banks and other financial institutions are unwilling to offer for lack of a credit history. That's the situation with many people today. Now imagine there is a fintech app that looks at your history of timely bill payments for a prepaid mobile phone, for instance, and uses that as a credit history to offer you the loan you need. That's precisely what the new Account Aggregator Framework aims to do. Let's understand how it will work. You apply for a bank loan. In your first meeting with your relationship manager, they ask you to furnish a long list of documents, from bank statements to everything else. The process can be tedious. With this new framework, you could simply ask your bank to share your account statements with the institution where you have applied for a loan. You could just be sitting at your home. This control over your own data is one of the provisions of the Data Empowerment and Protection Architecture, or the DEPA. The DEPA talks about the creation of consent managers, which won't read user data but enable its encrypted flows between different financial service providers. These consent managers will be known as account aggregators. They have been designated as a new class of NBFCs by the RBI. Now, of course, this ecosystem of enhanced data sharing will work only when a large number of financial entities join and become financial information providers, or FIPs. So far, 8 Indian banks have joined the account aggregator ecosystem as FIPs. These are State Bank of India, HDFC Bank, ICICI Bank, Axis Bank, Kotak Mahindra, IndusInd, Federal, and IDFC First. Becoming FIPs in the AA ecosystem would mean that these banks and other financial institutions would have to share your data with an account aggregator. If you provide your consent for it, FIPs can subsequently apply to become financial information users, or FIUs as well. FIUs are entities that will consume the data that you share with an account aggregator. FIUs can include a bank giving out a loan, an insurance provider, or a wealth manager. No entity can only apply to become an FIU. It must first register as an FIP and then register as an FIU. So, a bank must first agree to share the data of its customers with account aggregators. Only then can it access customer data to provide loans. FIUs and FIPs must be registered with and regulated by any of the 4 regulators. These 4 regulators are the Reserve Bank of India, the Securities and Exchange Board of India, the Insurance Regulatory and Development Authority, and the Pension Fund Regulatory and Development Authority. So, there's ample incentive for financial entities to join this data-rich ecosystem. Currently, 4 account aggregators have got operational approval to start business. These are Finwoo, OneMoney, CAMS FinServ, and the National E-Governance Services Limited. 3 others, including PhonePe, have got in-principle approval to operate as account aggregators. Now, account aggregators will be data blind, meaning they won't store or process a user's data but only enable its encrypted flows between FIPs and FIUs. They can only share the data which a user has consented to share. Users can choose the accounts they want to link with the account aggregator. The account aggregators will monetize by charging FIUs and/or customers a certain fee. So how will the account aggregator framework change things for Indians? Well, besides enhancing the user experience, it will also massively streamline the availability of credit for individuals and small and medium enterprises. There are so many people who are looking to raise working capital to start their own enterprises. A lot of these people are based in rural areas and lack access to traditional financial institutions. They also have no or little of the credit history needed to become eligible for microcredit. But with the account aggregator framework, if you can show that you've regularly paid your telephone or electricity bills for the past 2 years, it would be treated as your credit history by a lender, who may then agree to provide you the credit you need. The telecom example isn't far-fetched. In fact, Nandan Nilekani, chairman of the RBI Committee on Deepening Digital Payments, said that talks were on to get the telecom data on the account aggregator network. According to the RBI, the estimated debt requirement for Indian MSMEs points to a colossal credit gap of over $219 billion, outstripping the available supply of finance in the formal sector. By ensuring greater access to data, the account aggregator framework might help ensure more equitable access to credit.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.